Hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. We're at a very important place in the price chart right now, and there is a convergence of many factors, both on-chain and technical, that are making this area an important place to watch. We'll go through all of that today. If you enjoy my content, make sure to give my video a thumbs up and subscribe to my channel. Hitting the bell icon next to the subscribe button lets you know about all of my videos the moment they come out. I'm having a blast breaking down Bitcoin and talking about it with you, and I appreciate all of the wonderful support and sentiment I've gotten from you. But you didn't come here for me, you came here for the data, so let's talk about Bitcoin. So here's our price action, still hanging out and ranging in the same place we were the last time we spoke. And in the previous video, I expressed my expectation that price would continue doing exactly what it's doing right now for the month of December. In the last video, I'll leave a link in the description below for you to check this out, but we talked about what price typically does after major liquidation events. Usually, what Bitcoin likes to do is come back down and test the liquidation low, which is down here around 42,000. Well, as you can see, we have not done that so far. We've actually been staying well above it. And in the previous 3 times this year that we've had a major liquidation, all of those events has seen price come down here and in fact test even below it, below the liquidation wick. But we're not seeing that now. And, if you're a trend trader, it doesn't get much better than this. But for anyone with a low time preference who is seeing this as a multi-month or multi-year investment, this is crabby and boring, and it can be very painful to watch. But this is only a 4-hour chart, and this is only a handful of days. And it's all within historical norms so far. But if we zoom out a bit, here is our monthly chart, and if we draw some lines here to create some resistance, this is the top of the monthly range earlier in the year, here's the bottom, and here's the midline. This will help us get an idea of the ranging that I want to talk about. So here we are looking at the weekly version of that monthly chart, and it's obvious we've set a top range, we set a lower range, and we have this kind of middle area that's providing some contention, a bit of resistance. Now, Bitcoin is a ranging beast. It's a very trend-heavy asset, and it stands to reason, if we're being completely objective, barring all knowledge of on-chain dynamics, it stands to reason that when a top of the range is established and a bottom of the range is established, and you go all the way up and you test the top of the range, you punch through it and you reject it, it stands to reason that price will eventually find its way back down to the bottom of the range. Now, it doesn't have to. What it could do is find support here and we rally out from this area. That would be fine. And if that occurred, then I think a lot of people would be happy. But if we're being reasonable, what seems to make the most sense is for price to have bounced out of the upper range. It was pretty heavily rejected. For it to come down, find support here, and then ultimately trend back the other way before reversing. A reversal down here seems much more probabilistic and likely than a strong reversal from this area, given how much time we've spent here this year, and given the swift rejection of the punch through in the recent top, in the recent all-time high. It just stands to reason to me that this kind of action will ultimately lead to this kind of action before we turn around. If we get below this value right here, we probably will get back down here, and it will probably take a couple of months to get out of this lower range. Just look back here. This was about 2.5 months. This was about 2.5 months. Stands to reason we'd have something similar. People don't want to hear this. There's a lot of moon boys out there that think that we're still going to 100K by the end of the month. I'm here to tell you that's not going to happen. If it does happen, I will eat crow. I will be glad to be wrong. I'll be the first one to say, yeah, I blew that call. We went to 100K. I don't know what the hell I'm talking about. But realistically and objectively, this is not likely. This is much more likely. So I'm watching this middle area very closely, and in a moment I'm going to show you some on-chain confluence that makes this a very important place. But one thing I will point out, we're also right at the 200-day and 50-week moving averages, which are very important bull-bear oscillators for traders. A lot of people watch these moving averages. We've actually found our way below the 50-week, and we wicked below the 200-day moving average, and now we're sitting right on top of it. So both of these are also helping to provide some of the resistance we see in this area. When the 200-day moving average is broken by Bitcoin, when it gets below below it and closes a candle below it. Oftentimes it can take a couple of weeks or a month or so before price recovers. And that's just the 200-day by itself. When we also have this ranging pattern that we've established where the midline is right there, and we also have the 50-week moving average. There's a lot going on right here. This is a very involved trade to try to assess at this time, which is what makes me feel like standing on the sideline is probably the smartest move right now. So that's what I'm seeing from a technical perspective. I'm seeing that we have a lot of resistance here, and if we can't hold this level, a test of the range low for a couple of months is a probabilistic outcome. So let's go look at some on-chain data and talk about this some more. Here is our short-term holder cost basis. A couple of videos ago, we talked about this at length, about how the short-term holder cost basis represents a strong short to medium-term bull-bear oscillator. Short-term holders are the newest owners of coin. They've bought their Bitcoin in the last 5 months. They're the first group tested when price is showing weakness, and they tend to be the first ones willing to sell. They have the least amount of loyalty because they've been holding their asset for the least amount of time. If you look back through the last 2 years, the short-term holder cost basis provided key support in September of 2020 before the proper bull run really began. You can see price kind of floated above it here for a while as short-term holders enjoyed a period of time in comfortable profit. Then here in late 2021, as we pulled ourselves out of the summer bear and short-term holders found themselves back in profit, which is what happens when the price gets back over this line. This value again found itself as support. A few short-term holders capitulated who bought the top here in September, but eventually we cleared the room, price recovered, and we mooned out of this zone. Well, coming into December, we were hoping and looking for the short-term holder cost basis around 53,000 to once again provide key support. But as we know, we got a major liquidation event and a failure of that level. At the time, that 53 level was pretty important because it was the short-term holder cost basis at the beginning of December, and it was also the top from September 7th, on the day that El Salvador made Bitcoin legal tender. We had another liquidation crash, and that point marked the top for price for a good month. That was the 53,000 level we were at to start December and where short-term holders found their cost basis. So we had a nice confluence of technical and on-chain, and we had said that if that level broke, it would be ugly. Well, that's exactly what happened. It broke and it was ugly. And now short-term holders find themselves holding and spending in loss. Well, now that we have broken this value, the next group up to establish their sentiment are the long-term holders. Here is the long-term holder cost basis, and there is a second line on this chart. The lower line, the orange line, is the cost basis of long-term holders. A long-term holder is someone who has been holding on to their coins for at least 5 months. And based on statistical analysis, once you hold your coins that long, the likelihood of you spending them in the future on a given day is statistically very low. A bias develops over time as you hold your Bitcoin, and we see this in the data. I'm not making that up. The longer you hold your Bitcoin, the more likely you are to keep holding it. And long-term holders represent a very large part of supply, but they also represent a very important cohort of investors. They represent the true HODLers that keep Bitcoin for the long term. Their cost basis is shown here on this orange line. Right now it's about 18,000, and they have spent the majority of their history being comfortably in profit. Bitcoin tends to reward people with the lowest time preference. So if you've been holding for a few months or a year or two, chances are you have never truly had your price tested and you are comfortably in the green at this point. But there's another level for long-term holders that's very important, and that is shown on this red line above. The red line is what I'm calling their ideal minimum cost basis, and it's a 2.5 times profit ratio. There's nothing mechanical about a 2.5 times profit ratio resulting in XYZ price action, but there's a very psychological force. There's a very powerful mental framework around being comfortably in the money, about being in double profit from your initial investment. A lot of Bitcoiners that have been holding for a long time have become spoiled by the gains. It's really easy to make money with Bitcoin if you just hold on to it and don't sell, right? History has shown that. And for long-term holders, being about 2.5 times in profit as a group, as the millions of them combined, around 2.5 times profit seems to be a really important line in the sand. So that is what this red line is representing, 2.5 times their cost basis. Let me pull up my drawing tool here. Okay, we're going to look at a few times when this 2.5 time profit level has come into play. There are moments in Bitcoin's history where long-term holders find their ideal minimum cost basis of 2.5 times tested. And if we look back in time, whenever these moments are tested, the outcome of that test often helps to influence price action for the following months. And it can take time before the direction changes. Look here in 2012. Long-term holders found their 2.5 time cost basis tested in the run up to the actual bull run of 2013. This value was rejected though, and this is several months of price action here. It took several months of horizontal action underneath this red line before we finally broke through and created the bull run. Over here in the 2013 market, that value, that 2.5 times profit level, was found as support in between the peaks. Long-term holders found themselves tested. The market said, nope, we are stronger than this. We believe in Bitcoin. We want higher prices. And what happened? We mooned. Well, coming out of the backside of that market, long-term holders again found this profit level tested. But at this point, the market had lost strength. Demand was not there. Oversupply had been created from the selling at this peak, and there wasn't enough demand to continue pushing the price. So what happened? This area became resistance, and it sent us down into a bear market. And this is the brutal multi-year Mt. Gox bear market. But what you can see as price dug its way back out and it came up to test the previous all-time high, long-term holders again found themselves testing 2.5 times profit ratio. It was tested cleanly twice, which also, as I said, lined up with the previous all-time high. But once this value was found to support, off we went. There's another time in the past, here in 2019, after the plus token Ponzi and the rally here in 2019, we got a little micro top, a little local top inside of this larger cycle. And that top was marked by what? The 2.5 times profit ratio for long-term holders. This became a distribution event. The market did not have strength to continue. And then we spent several months, a year basically, in bear market before we finally broke out of it again. Here we are zoomed in. You can even see in late 2020 how this level helped provide a tiny bit of resistance. There's just a little bit of price chopping around before we ultimately broke through. There are times when price completely ignores this value, and that only happens when market conditions are so imbalanced that previous support and resistance are ignored. That can happen in all markets, and it's more indicative of market conditions at the time than it is of any one metric. But when the market is not irrationally strong, long-term holders can find this profit level providing key support and resistance. And so far this year, it has provided it twice. We got a quality test here at the end of the summer, and we got a test at the end of September. This test in September was also the short-term holder cost basis right here. They caught a bounce. And then as we came into December, the short-term holder cost basis was up here, and we now failed it, and we're now down at the ideal minimum long-term holder cost basis. And based on what we just went through, based on the reaction to price, to the outcome of this test, if this value holds, if this continues to provide support around 45,000, it's likely to expect, based solely on statistical history and nothing else, it's likely to expect price will hold and be strong over the next, 8 to 12 weeks, 3 to 4 months. We could expect price would probably not go back below this level because it tends to test it and then move away from it in one direction. If we do not hold this level, if this becomes a failure and we get down, the likelihood is that it could take many weeks or at least a couple of months before we come back. That's based on history. I'm not making a price prediction here, but I am preparing you for the possible outcomes of where we are right now. There's a couple of outcomes. One of them is that we just go sideways and bore the crap out of people, which probably is the most likely outcome because it's the one people want the least. The second most likely outcome, in my estimation, is a failure of this level and a retest of the summer lows. That is based on the technical analysis we did at the beginning of the video. But let's take all of that a step further. I'm now showing you the same chart. We've still got the long-term holder ideal minimum cost basis here at 45,000, but I've added a couple more things. We also have the 200-day moving average, which we mentioned earlier is right around 47,000. We've also got the 50-week moving average, which I have named as the 350-day. Same thing. We have the 50-week moving average. And we also have the 50% retrace of the yearly price action. So this is an indicator that my colleague at Glassnode, Permeable Nino, shared with me, and I find it very interesting and powerful. The 50% retrace point between various time periods is a really crucial point for price action. And right now, we find ourselves sitting at the 50% retrace of the yearly action, which is similar to this median line we drew on the very first chart we looked at together. This is basically representing the same thing. And that value is right at $45,000. So we've got long-term holder ideal minimum cost basis. We've got the halfway mark of the year's price action. We've got the 200-day moving average, and we've got the 50-week moving average. All of them are right here. There's a lot of evidence stacked up here that tells us that if we are unable to sustain this level for price, the most likely outcome is that we come back down and we test the range low. I'm not trying to scare anyone. I'm not telling you that price is going to 30K, but I'm laying out probabilistic outcomes. Outcome number 1 is that we continue to do this. That would be number 1. Outcome number 2 is that we fail this level, we come down, and then we spend a couple of months testing this. That would be number 2. Number 3, we find support here, and then we moon. That would be number 3, and the least likely, in my opinion. We may eventually do this. We may do this next year sometime. I don't know. But right now we are in the center of a very well-established range, and I don't think anyone could make a confident argument that we are going one way or the other at this moment. Not with all of these factors now playing at this point in time. So keep this in mind over the next couple of weeks, the next week or two. Watch this closely, because if 45,000 looks weak and we start getting down to 44 and 43, I will probably start emphasizing the likelihood that outcome number 2 is going to play out. We'll see when we get there. I don't like to get too ahead of myself. I like to try to take the data as it comes in. But that's what we're looking at right now, friends. This is a painful point for the market. But one thing to stay confident about is that we're not seeing spending from older coins. I haven't shown you a bunch of those charts today because I wanted to keep this video succinct and to the point. But the spending behavior that we looked at in the previous videos is continuing trend-wise. We're not seeing older coin spending. And as long as the HODLer cohorts remain steadfast, then my expectation is that any ranges, any tests of lower ranges will be temporary in nature as long as we're not seeing that spending I mentioned. So that's what I wanted to talk about today. I wanted to show you how many factors are converging to this area of price that we're in right now. The long-term holders' ideal cost basis is being tested. The 200-day moving average is right here. The 50-week moving average is right here. And the halfway point of the year's price action is right here. Got a lot of technical factors lining up with a very strong on-chain indicator, which is the ideal cost basis for HODLers. Make sure you're following me on Twitter at TXMCTrades, right here. I post a lot of analysis and observations. I talk about podcasts I'm going on. I announce Twitter spaces I'm hosting and participating in. It's a great place to follow me and interact. If there's any questions or concerns you have, make sure to leave them in the comments and I'll go through them as usual. My core thesis for Bitcoin has not changed whatsoever, but one of my goals is to provide as much information as I can to you, my viewers. Whether it is positive or negative or nerve-wracking, I want to tell you exactly what I'm seeing. And right now, this is a very precarious spot for the market. We still see a lot of accumulation on chain, but there is weakness abound by these short-term holders who hold enough of the supply that they're able to pull price down despite all of the DCAing and sat stacking by the HODLers. And the coming days will help to decide what the near-term price action is probably going to look like. I hope you're all enjoying December and getting ready for Christmas. This is a time of year that I really look forward to, and I always like to recharge my batteries and try to relax in December so that I can hit the beginning of the year running. And I hope that you're all able to find time for yourselves and for your family at this time of the year. We'll give the market a couple of days to play out, and sometime in the middle of the week, maybe Tuesday or Wednesday, we'll make another video. Till then, take care of yourselves, friends. We'll speak in a few days. Merry Christmas, and cheers.